I'm proud to welcome you to a special series of the Exceptional Advisor podcast. Hi, I'm Bob Powell, your host. Over the next several weeks, this special series will highlight exceptional advisors in these extraordinary times. We hope this series helps you to better serve your clients, differentiate yourself from the competition, and enhance your ability to communicate those differences in light of the unique challenges and emerging norms of the current times. Today, my guest is Dana Anspach, founder and CEO of Sensible Money, and one of the first advisors to earn the RMA designation. 3, 2, 1. So, welcome to the podcast, Dana.
Great to be here. I appreciate it, the opportunity to be here.
It's a pleasure. I so enjoy talking with you all the time that we're together in person, on the phone, on a podcast. But before we get going, I'd love, for the benefit of our listeners who may not be as familiar with you and your work as I am, do you mind giving us a brief overview, brief bio?
Sure. So I started in the financial planning business in 1995, and my career evolved into really specializing in what we call decumulation. When I came across the RMA designation in 2010, I was in the very first class that acquired that designation. Love working with retirees, and also had the opportunity to write for an online platform called about.com. I was their money over 55 expert for about 8 years, and that enabled me to take a deep dive on a lot of topics: Social Security, decumulation, withdrawal planning, all of those kinds of things, and create an extensive bank of content and write books on the topic, and hopefully use all of that knowledge not only to help clients, but to help other advisors.
Great. So we're going to start. You mentioned the RMA, and the very first question is about the degree to which your investment in your advanced education certifications like the RMA has helped you during these times of the COVID-19 pandemic.
I think it's been phenomenal because our whole process is around managing risk. And I think when you are in the accumulation mode, you're 30, 40 years old, structuring a portfolio to get the highest return, per unit of risk makes sense. But as you enter the decumulation mode, you really have to focus on how do you deliver more certain outcomes.
Mm-hmm.
And we use worst case scenario planning. We do a lot of stress tests and modeling on our clients' plans. And that particular process has been incredibly invaluable because when we go through something like this, it's us able to sit down with the clients and say, well, of course we expected this. Not only did we expect, I shouldn't say this exactly, but events like this will happen. This won't be the last one. And we test for it. And we want to make sure that your retirement plan is sustainable because we know these events will happen. And so it just put us in a really good place to continue that type of communication with our clients and to help them understand why we didn't need to make any big changes.
So you may have already answered this question in an indirect way, but was your business practice prepared for the current state of affairs? And if so, how so? Was it what was in place with respect to technology, human capital, disaster planning, crises communication, business continuity plans, E&O insurance,
Yeah.
custodial risk, et cetera, et cetera?
Yeah, oh, that's a lot. So let me try to take that one item at a time. The overall answer is yes. I think we were extraordinarily well prepared. We've had many of our team members comment on that. So a little bit about our structure. There's 10 employees. We have five or six of us, I think, here in Arizona. It's funny, I can't even remember the exact number. We have 3 that live in other states, one in Massachusetts, one in South Carolina, and one in Oregon. And so we've all been used to working remotely as a team. We also have clients in 26 states. About half our clients are local here in Arizona, but even many of those have transitioned to remote meetings even before this event. And so for us, it was really seamless. We had already, encouraged team members to work at home when they needed to and offered that kind of flexibility. And that really started, with me realizing I'm better when I can set my own schedule. And if I have a day where time is tight, and I don't have to commute to the office, that can make all of the difference. And I feel like most people, at least the types of people we hire, really want to do a good job. And so we've always given them that type of flexibility. And so we were very well prepared for this. We didn't have to learn any new technology. We've used GoToMeeting, which is a web sharing application, screen sharing application for many years. All our clients already were used to uploading documents. We use a system called Box that a lot of Fortune 500 companies use because of its security settings is why we chose it. So our clients were used to exchanging information that way remotely. We were used to interacting with them remotely. So in terms of disaster planning, we didn't need to do anything differently. We were all prepared, and for the last 2 months, I mean, Arizona has reopened. I understand a lot of places haven't, but we give everyone the option to, of course, work from home. They still have that option. And then we would take turns coming into the office because sometimes it was nice to have that mental break and actually get out of the house.
Right.
And so we would all call our office days and be like, okay, I got Wednesday. And so that person would have the office to themselves that day, but at least it still, allowed them to get out of the house and in a different environment. So it worked really well. I think that answered probably the more of the disaster planning and the technology side of your question. I think there was a few more components. Custodial risk, was there one or two other things in there?
Crisis communication, business continuity.
Yeah. In terms of crises communication, I mean, we definitely sent newsletters to clients, and we were all on the phone those first 2 weeks. We have team meetings with our team every Tuesday mornings, and so right from the start of this, we have a couple of us who have been through many events like this, particularly the 2001, 2002 were pretty rough in the markets, as was 2008, 2009. And then we have a few team members who have never been through this event. They're newer in their careers. And so what we emphasized from the start was that our definition of success was getting through this without having a single client abandon their plan.
Mm.
And by abandon their plan, we mean, of course, exiting out of the market at the bottom or while things were down. And so far, we have been successful in that goal. And so that's how we defined it. We did a lot of tax loss harvesting and accelerated Roth conversions while the market was down. So we were very, very busy in March. Overall, it was personal communication, although there was newsletters that went out to the client. Each one of us personally reached out and talked with clients. And the interesting thing, I have one client that, I always join them on meetings, but a lot of my other staff are the ones that primarily interact with them. And when I called him, he said, "Well, what are you doing calling me, Dana? I mean, I thought everything was fine. Now you're calling me. I'm wondering if I should be upset." So it was really a testament to the job, we've done. And for most people, communicating how our process works and why these market events don't have to disrupt their retirement plans. Most of them truly understood that. A few newer clients, we really had to spend a lot of time, as I call it, talking them off the ledge,
Yeah.
really emphasizing why they should not exit. And we didn't know, and we still don't really know what the long-term impacts. I mean, we could still see the market go back down. I think it's recovered far faster than most of us expected so far. And we still don't know, but we knew sticking with the plan was the right thing. So definitely a ton of communication. In terms of custodial risk, we're with Schwab, and so pretty much all of our client accounts are custodied at Schwab. It was interesting. Schwab, I don't believe, was well set up to a seamless transition to work from home. And so we saw a lot slower response times for non-urgent issues like our Roth conversions. And they've gotten it fixed. They've gotten on the ball. I mean, we love them as a partner. But we did have to communicate with clients around that. Like, understand the whole world is shifting to work from home right now. And so, although we may be very responsive, our custodian right now is having lower than usual response times for non-urgent issues. And so, we did have some communication around that with our clients too.
Mm. So when you think about sort of as you've gone through this exercise, did you notice any sort of gaps and then say, well, we need to plug that. we should have done this differently, or we could have done this when we did that? Any learning lessons from what you just went through?
I think it's difficult. If there's any learning lessons, it's really around, when we go through something like this, people talk about mental health, and it's very disturbing. And even though our daily life and we were well set up to weather this from an operational standpoint, it's been interesting to watch. Some of our team members have kind of really love working from home and do their best work, and others of us, me being one of them, um, you know, really struggled to be as focused as I normally was.
Hmm.
And all of the stuff going on in the world, and all of the confusion around what's the right thing to do. And so if there's any learning lesson, it's for us, it's been having a lot of grace in throughout this. Um, we feel like as a team we've handled it very well. But I think when these kind of events happen, you have to make sure all your critical things get done and your responsiveness, and we did a great job of that. But it's also having a lot of grace. I think for me that's been the biggest lesson that's come through this, is just helping people understand we're all not going to be at our best when these things happen, but we've all still done a great job of focusing on what we think of as mission critical things.
So, speaking of mission critical, and uh, in terms of your business and the firm's revenues and profitability, did you have to make any changes or anticipate making any changes to, for instance, your pricing, or did you worry about revenue declining or profitability declining during this period, or
I mean,
how has it been?
yeah, I think of course, if you run an RIA firm, or any kind of business in financial services, I've been through 2008, 2009, so you know I know in any single calendar quarter your revenue can drop by 30%, and I've experienced it before, and so it's never pleasant when it happens, but your profitability is going to go down. We will have less revenue this year, probably substantially less than what we had initially planned on. But you have to be prepared to weather that in this business. We discussed with the team right from the beginning that depending on where things ended up, we were not going to let anyone go. But if we really discovered that we were going to be short on cash flow, that we would discuss implementing 10% pay cuts across the board. And everybody kind of agreed they would much prefer that than letting somebody go. We
Yeah.
haven't had to do that. I don't think we will, but you didn't know when this started, right? So we didn't know how it was all gonna play out. But we were certainly prepared and open, and discussing some of those things. And I don't think we'll have to make any substantial changes in pricing, in compensation, in anything. But I think if you're in this business, you have to be prepared for that.
Right. Any thoughts about what kind of changes you anticipate making to your business going forward? Anything that obviously
There's
you
not.
mentioned grace, but
Yeah, I mean, if there's anything, it's really for us, more on the technical side of things. We're a firm that uses a process called asset liability matching. We typically buy fixed income or CDs that mature to meet clients' near-term cash flow needs. And with interest rates as low as they are, we're definitely looking at, should we place a higher focus on fixed annuities, or, insurance products, if we can get a little more yield there. So there's some technical things that we're looking at changing. But in terms of our overall process and pricing and staffing, um, no. I mean, whatever the source of volatility is part of managing money. And so I think, you have to be structured in a way to weather that.
right, yeah. Anything else about the business of your business that's worth noting before we turn our attention to your clients?
I think there's always the behavioral side of things, and it's interesting to see, as you have other advisors that work for you, not only are our clients subject to um, getting very concerned when the market drops as quickly as it did, but so are some of the advisors, especially if they haven't been through this before. And so that need to emphasize and educate your staff to be just as strong of a leader for your staff if you have people working for you, and say, no, here's why this isn't likely to be like the Great Depression, and here's why we shouldn't abandon our strategy. We found that communication internally was needed just as much as externally.
Mm.
And I think we forget as advisors. I know in 2008, 2009, it was awful. I mean, it was like I had a business partner at the time who described it as being in the fetal position for 2 years. And, just trying to get clients to stick with the plan, and that kind of energy focused on educating them when they were so fearful. So we need that reassurance too. And we tried to offer it internally, and seek some great outside resources that we would share with each other to help us. So that certainly came out of this. Is we forget that we all need that just as much as our clients do.
Yeah. It's interesting. I mean, one reason why we're doing these podcasts is because we know that there are a certain number of members of the Investments and Wealth Institute who didn't experience 2008.
Yeah.
And this is partly for their benefit, because this is a chance for them to learn how others who have gone through episodes like 08, 09 have done it and have weathered the storm. I'm often reminded, Dana, I've told this story in the past on another podcast, but it's appropriate to retell it again here, which is in 2008. I remember being at a financial planning conference, and as the market started crashing, I forget whether it was Lehman or Bear Stearns at the time, and I was sitting across from a really young financial planner who his face was ashen, and he said to me that he was beginning to doubt everything that he'd ever told anyone about financial planning and investing. And obviously he was so young, he had never experienced anything like 87 or 2000 or whatever. And so
Yeah.
this was his first experience with a dramatic market decline, and he was panicked. He had lost all faith in whatever he knew.
Yes. And I think I even remember feeling that way in 2009. Like, what if I was wrong?
Mm,
That just, and I remember telling our staff when this started that it may get much worse, and you may question everything we've ever done. I remember
yeah.
telling them that, you may think this is all, everything we've ever said is wrong. And it is a little frightening to me that it didn't get to that point, honestly. Well, and in some ways, maybe it did, because it was such a quick decline. And then, no one expected the rebound. But I did have several people I had to talk off the ledge in March.
Yeah.
Um, so maybe it just happened at a much accelerated pace. But to me, so far, it doesn't feel as bad as 2008 and 2009 from a financial standpoint. There's other, of course, reasons why it feels much worse. But just from the standpoint of managing our business and our clients' emotions, it hasn't felt as traumatizing as that did.
Yeah. Well, both periods are sort of marked by this uncertainty, and it's just hard to we'll only be proven right over the course of time, right?
Yes. Yeah.
Or wrong.
Yeah. Exactly.
So let's chat about your clients. How are they doing? And I suspect fine, given what we've just discussed. And I'm sure I know you can attribute that to, but I'm happy to have you sort of tell us about that.
Yeah. I think, yes, I mean, our clients are doing as fine as anyone can be doing in this odd, situation the world finds itself in. Um, from a financial standpoint, we've always emphasized being able to deliver reliable cash flows, and that the point of the particular process we use was not to shelter a client's portfolio from volatility. We've done a lot of educating that there will be volatility, but that we won't have to sell any of the growth investments while they're down.
Hmm.
So I had a neighbor I was talking with the other day, and they reminded me of this saying about um, your house, that the only 2 days the price matters are the day you buy it and the day you sell it. And I had heard that saying before regarding real estate, but of course it applies to investments too. And so that's what we've really tried to emphasize with clients is, we're not going to be selling growth investments. We primarily use index funds, dimensional funds. We're not going to be selling any of those right now. Your cash flows are 100% covered by what we have in money market and CDs and bonds maturing for, X amount of years, in some cases 5, 6, 8 years. And so we have a long time to wait for the market to recover before we need to sell any of those investments. And because we've done that kind of educating, our whole process when we onboard a client has a series of strategy meetings and 3 what we call retirement readiness tests that we run. And we illustrate visually the volatility that they should expect. And I think that helped a lot.
Mhm.
We had some clients send us thank yous in the midst of this and ask how we were doing. That's always heartwarming. How are you guys holding up? And, then we had others, usually the newer clients, like all of my clients that have been with me through 2008, 2009, I didn't hear a peep from them. And when I did reach out, they're like, "Oh, we're fine. We've been through this with you before. We know,
We
we
know
know
the
how it
drill.
goes.
Yeah.
We know the drill." Yeah, but the newer clients were the ones that we found were much more concerned, or people who were just about to retire or had just retired, naturally, understandably so. They're concerned.
Mm.
And so we found spending a lot more time with them and revisiting why we structure things the way we do was really, really useful.
You mentioned in terms of adjustments that you were doing Roth IRA conversions and tax loss harvesting. Obviously, that's a time-intensive effort, right, to make sure that you're
It is.
managing tax brackets and whatnot. And can you talk a little bit more about that process?
Yeah, it is very time intensive. We do a projection model. We do tax projections for each client every year. So we have a pretty good idea of, what their tax situation looks like. And um, we've recently adopted a planning tool called Holistiplan. If anyone wants to take a look at it, we love it. You literally upload a client's tax return and it gives you the set of analytics that we used to have to do manually, and now it does it all for us. It's really, really phenomenal. Um, so just a little
Yeah,
you know
copy.
advice out there for anyone that wants to check it out. But we do that kind of tax planning, and so because the framework is in place, when these things happen, it's pretty easy for us to know which clients tax loss harvesting makes sense for. And I have a few that have such large capital loss carryovers it would make no sense for them to have anymore. We have those coded in our database, so we know that doesn't make sense for those clients. And same with Roth conversions. We have already certain ones that we know Roth conversions were already something we were going to look at for them. And so when the market's down, we explain to the client, we're converting in kind. So we're converting shares of this mutual fund you own. And so once it goes into the Roth, when those shares prices recover, those gains will be inside that tax-free Roth wrapper. And clients got it. Most of them got it. But it was very time intensive. And so we were incredibly busy in March and early April doing all of that and talking to the clients and reassuring them. And then, toward the end of April, it settled back down to normal.
Hmm. Any other tactics, strategies that you employed, rebalancing or other maneuvers that
No,
tweaking?
if we followed a more traditional uh, portfolio model, we would have rebalanced. But,
Hmm.
with our particular model, bonds mature and we use those for consumption, and we don't sell equities when they're down. And, we do sell them. It's not a traditional rebalancing process, but we measure against the client's plan. And at other times, usually when the market's up, is when we are selling equities. So we didn't do any traditional rebalancing. We do have a process where we look at clients that have excess cash, meaning they don't need that cash for consumption, and and we look at their overall allocation. And so we put a lot of cash into growth. It's not a traditional rebalancing process, but any clients that had excess cash that wasn't used for consumption, we did go through and get that invested into growth. And we had a few forward-thinking clients who said, "Hey, I've got this extra money over here. I actually want to put it in the market." We're
Wow.
always thrilled. We know we've done the right job in educating our clients when we get that kind of response. So we had some that actually wanted to put extra money to work, and in those cases, we did that.
So I think of these current times as interesting, not only because of the pandemic, but also because it follows on the heels of two dramatic pieces of legislation, the CARES Act and the Secure Act. And how have those pieces of legislation affected what you've done? I know from where I stand, I get lots of questions, certainly about the CARES Act and coronavirus related distributions and loans, et cetera, et cetera. Has that impacted
Yeah,
your practice?
interesting. Well, the Secure Act for us, the biggest impact was the change of the RMD age from 70 to 72.
Hmm.
And so we had to update our planning model to reflect that. And so we create a certain, withdrawal schedule for a client, how much money is going to come out of the IRA versus the regular brokerage account versus the Roth. And when they change something like the required minimum distribution age, suddenly a lot of our clients have an extra 2 years before they have to take money out of the IRA. So we did find that, those projected withdrawal patterns were being changed. So
Hmm.
for a lot of our clients, it's going back through and saying, okay, well, we thought it was going to look like this, but now, you have an extra 2 years, so we're going to do things a little differently. So there was certainly some planning that came about because of that. In terms of the CARES Act, I think because so many of our clients are retired or, very close to retirement, we haven't had many questions about that. We haven't had many clients, actually any that I know of, unemployed.
Hmm. Well,
Um, we had one who experienced a substantial decrease in income. And so luckily they have a large non-IRA account. And so we were able to set up some distributions from that to tide them over because they're pretty confident that a year from now they'll be back on track. We have a few other clients, executives that are concerned that their jobs may come to an earlier demise. And so they've asked us to rerun all of their plans. What if I am terminated this year and I get this severance package so that they can be prepared if that should happen. But no, we haven't had people need to take advantage of the. I know you can do the $100,000 distribution with the CARES Act, and you can have 3 years to repay that. But I think just the nature of our client base, we haven't had questions about it.
hmm. So recently, I did a podcast with a researcher from Vanguard, and the nature of the research was around the value of advice. And um, Cindy Pagliaro was the person I interviewed, and she talked about how, at least in the Vanguard research, they said half of the value that an advisor provides to the client is related to the investment performance outcomes, et cetera. But half of it is related to what she described as emotional outcomes or behavioral finance. Can you talk a little bit about the degree to which you focus on emotional outcomes and behavioral finance with your clients?
Yeah, I mean, I think for us, that is the greatest value that we bring. Um, most of our clients have over 1 million. Um, they've saved their whole life, and we really try to focus on that. I mean, I've had clients over the years, and it always cracks me up. They'll sit in the office across the conference room table and say, "Now, Dana, you know I'm going to retire. Like, I won't have a paycheck anymore, right?" And I laugh because I think, yes, and that's the only type of client I work with. I know that, I get it. And and so that's really what we try to emphasize to a client is, we are so thorough in our testing process. And some clients like all the details and some of them just want, just tell me I'm going to be okay. But they know we are so thorough and conservative, and we do it for us so that we can be 100% confident when we tell them, yes, your plan is going to work. And if certain events happen, you might have to make adjustments, but you're not going to run out of money, right? That's really what everyone wants to know.
Right.
So you're not going to have to run out. So for us, that behavioral aspect is really focused on that big picture. Like, you're going to be okay. Market volatility is going to happen. I tell people all the time, if you could just turn off the news and you didn't open your statements for 2 years, you would probably never know this happened. So all of that anxiety we experience. Like literally, if we weren't exposing ourselves to all that news, we wouldn't know that these horrible events in our portfolio in turn was going through all these gyrations. We wouldn't know it. And your cash flows we've set up so those are going to continue to be the same. So our process, I think that behavioral aspect is so huge. And then reminding people of it when we go through this and saying, remember when we talked about this, and our focus is on your cash flows. And, it's scary. And we always try to empathize with the emotion too, because when I see portfolios drop substantially, I mean, I look at the graphs in our performance reporting. We use Tamarack. It's awful to see, right? I mean,
Right. Yeah.
you see hundreds of thousands of dollars, that the portfolio is down in a matter of weeks. It really is awful. So I know we try to emphasize that with them, and say, yeah, I know it's awful to see it. And what we need to try to encourage you is that that doesn't impact your long-term outcome unless we sell right now. So we need to wait it out. Um, not focus on the total bottom line value. Let's focus on the cash flows, and those aren't going to change. We don't need you to move. We don't need you to, give up anything right now. And yeah, so much of it is relating to the client, understanding, not arguing with them, like really relating to those emotions that they're experiencing and understanding why they're so scared, and that for them, that fear that they could run out of money is real. And then, emphasizing why that's not going to happen. It's huge, huge. That's the biggest value we bring.
Yeah. So maybe you could elaborate a little bit on this in terms of best practices with respect to client retention. Is Zoom calls, emails, frequency of contact. Any sort of thoughts about what works best for you, and perhaps maybe for the benefit of younger advisors who are grappling with how to deal with this and their clients, what they ought to be thinking about in terms of best practices.
Yeah, I think, it's never, you can never err on the side of over communicating to your clients in a personal way. So that personal phone call or personal email, I think, is huge versus, if it's always newsletters going out to the entire client base, it doesn't have the same feel as when you're going through these events, really picking up that phone and talking to them. How are you doing? Don't talk about the portfolio unless they want to, but how are you doing? Is your family safe? How are you dealing with all of this? And you have to be prepared for all of those emotions that may come back at you if they really are nervous and scared. So you have to be in a place to be prepared for that conversation. But it's huge to reach out and just ask people how they're doing. We've found that's during these types of crisis on a more regular basis. We let the client dictate how often they want to hear from us. And for new clients, we find that we meet and talk with them. We might have 3 or 4 meetings, web meetings a year. We might have, emails very, very frequently, phone calls. And then the longer they're our client, the less often they want to meet. And so for many of my clients that are over the age of 70, we give them the option every year. Do you want to, have a in-person meeting? Do you want to have a web meeting? Or do you want us to deliver a written review report, and then we'll address any questions once you've looked it over? And it's interesting how many now want just that written report. They're like, no, just send me the report. I'll let you know if I have any questions. Because we've been working with them 8, 9, 10 years. And so um, they're like, I get it. I don't need to talk about anything. You tell me everything's fine. I just want to see it in writing, and I'll let you know if I have any questions. So that communication pattern changes a lot from the first 5 years of working with a client to, what it might look like later. And that usually happens organically. The client dictates that. If we have clients that still want to talk to us frequently, we're there. But most of them will settle in and kind of, not want to discuss things as frequently as they did when they were newer.
So I think I know the answer to this question. So I'm going to rephrase it in 2 ways. One is, what have you learned about your clients during this period? And perhaps also, what have you learned that's new about your clients during this period?
Interesting. in terms of what we've learned about our clients, I think we're always surprised, as I mentioned this before, about the ones that do email us saying, "Hey, we know we're okay. Um, how are you guys doing?"
Right.
That level of compassion that we get back is always, I mean, it's amazing. So that always comes as a pleasant surprise for us. Um, I think we're always more prepared for the flip side of that.
Right.
And, and so we really feel like, wow, we have done a really good job of educating our clients. They get it, which is awesome. What was the second part of your question? What have we learned
Well,
about?
so learn that might be something new that surprised you, I guess, that you weren't expecting. It seems like you know your clients so well that nothing they do might surprise you, except for that kind of emails asking whether you're okay.
Yeah, I can't think of anything that's super surprised me. I mean, a few surprised me with wanting to invest more money. That was the other surprise that I just wouldn't have expected.
Mm,
Um, so that was on the pleasant side of wow, wow, this is amazing. They understand that this could be an incredible buying opportunity if we look out 2 years, 5 years from now. So that was a great and pleasant surprise. Um, but that, nothing else. I think I've been doing this for 25 years, so not 20, yeah, since 1995. Um, I had
well,
to think about that. How long is
yeah,
that?
it's a
Wait a
while.
second. It is a while. And so, you've heard almost everything, you've encountered almost everything at a certain point, and so I don't feel like we get a ton of surprises, and most of the ones we do now are always on the positive side.
So one other question, I know that you've used the Colby with your staff. Do you use it with your clients as well to get a sense of how you work, how they work, and how you might work with them?
We do, and so Colby, for those who don't know, is an assessment tool. I am an assessment tool junkie. I've probably taken, Myers Briggs, PDP, Colors, Disc, Strengths Finders, you name it. I've taken it. Um, I came across Colby in 2010, I think. I got certified in either 2011 or 2012. The most useful assessment tool for me that I've ever used. And so we use it with our staff. And yes, we now Colby all of our clients that are coming in. Although we don't do a whole lot of educating with them, it's a useful reminder for us of people's natural reaction, natural problem solving reaction. So just to give you an example, some people do really well with lists and written information. And, but if you were to send me a long to do list, I chafe at the idea. I have trouble following a long list of instructions. It just, I think you're the same, Bob, if I remember.
Yeah, I feel like you know my deepest, darkest secrets, Dana.
Yes. And so, we try to use it to educate our team. Like, while some clients may do really well with a very detailed long list of, step one, do this, others you have to break it down, and they're going to do much better if you jump on a web meeting and walk them through how to do it or what to do. So we love knowing our clients' Colbys, and if anything, it helps bring some humor to situations that otherwise might be stressful. Like, why won't this client respond to my email? Well, that particular client isn't going to respond to a long, detailed email very well, but they might respond to a one sentence email or phone call. And
Mhm.
so it just helps us remember that we're all different. We all have a very unique approach to problem solving. One isn't right, one isn't wrong. But when you really respect and appreciate the differences, you work better as a team, and you work more efficiently with your clients.
We've covered a lot of ground, but anything that we haven't touched on that you'd like to talk about, or anything that you've talked about that you'd like to emphasize?
I think the ability and willingness for a lot of our older clients to learn remote technology. I didn't bring that up earlier when you asked, but we have seen that many clients, if they're not comfortable coming to the office, even if they are local, we've offered to walk them through how to download GoToMeeting, how to get set up, and and it's great. I think they're feeling more connected, and many of them have now gotten used to that technology to communicate with their families, with their grandkids. And so, for advisors out there who don't work remotely with clients, I think this has been an opportunity where people are much more receptive to the idea, and they appreciate that if you're offering that now, it's for their safety. It's to make sure that you're providing a service in a way that they feel comfortable. So that aspect of it has been pretty neat to see also.
I think we're entering a brave new world where this may become sort of I don't know if the preferred method of communication, but perhaps so widely accepted that no one will think twice about doing it. If someone says, join me for a Zoom call or join me for a GoToMeeting call.
Yep.
So
Much more widely accepted, yes. And overall, I think that's a good thing. And we've also actually been surprised this last week that we've been open. We had 3 clients come in face to face, and they are all very concerned about their risk, but yet they still insisted. So it's interesting. It's been interesting to see people's responses, but they still wanted that face to face connection with us. So in some ways, they looked at us like family, like, no, we know we could meet with you remotely, but we wanted to come see you.
right,
So we thought that was really interesting
that's
too.
great. That's great to hear. That's we here in Massachusetts, I think, are still in phase 1 of our move from stay at home to safer at home, and
Yep.
I don't think our advisors are meeting with folks face to face yet. We'll get there. We'll get there. We'll all get there.
Yep. We will
So.
all get somewhere.
Well, I'm going to let you get to your next appointment, and I can't thank you enough for being on the podcast. I think it's been really helpful to both experienced advisors and those who have just entered the business.
Yes. Well, good. I hope it has been. And as always, it's wonderful to talk with you. And hopefully, this has been helpful.
Yeah, hopefully we'll see you at a upcoming conference at some point, maybe in
One
December or
day
so.
in person.
One day in
Yes.
person. All right. Thanks again, Dana.
All right. Have a good afternoon.
Thank you for listening to this episode of our special series, Exceptional Advisors in Extraordinary Times. My guest was Dana Anspach, founder and CEO of Sensible Money. If you've enjoyed this podcast, then don't miss our Exceptional Advisor webinar series hosted by Tony Davidow, available at investmentsandwealth.org. Stay up to date and have the latest episode delivered straight to you by subscribing through iTunes, Spotify, or wherever you get your podcasts. The Institute stands ready to help you as you navigate these turbulent times with new resources, research, programs, accommodations for candidates, and certificates. For more details on resources available, visit www.investmentsandwealth.org. The Institute is a professional association, advanced education provider, and standards body for financial advisors, investment consultants, financial planners, and wealth managers who embrace excellence and ethics. Through our events, continuing education courses, and acclaimed certifications, which include the Certified Investment Management Analyst, Certified Private Wealth Advisor, and Retirement Management Advisor certifications, we deliver Ivy League and practical education for investment and wealth professionals. The Investments and Wealth Institute has been helping investment and wealth professionals become exceptional advisors for over 30 years. Please visit us at our website, www.investmentsandwealth.org, to learn more about our certifications, conferences, online learning, and continuing education programs.